with Hive. They are a data center company. I think their history started in Bitcoin mining, and having grown their expertise around, operating their, a data center with a lot of GPUs, because the GPUs that are used to build large language models are also used for AI build outs to build large language models. And that's something that it looks like Hive is taking the opportunity to move to the AI, market of building large language models, offering their capacity to companies that want to build those technologies. Now, this is the same thing CoreWeave has done. CoreWeave had a history of doing Bitcoin mining, and then they moved successfully to the AI space. They changed their name so they'd be kind of recognized as more of a, hey, we're a data center company focused on AI. So that makes sense that, hey, their management's doing the right thing. Let's go where the opportunity is. When we look at the stock, it's really gone places, huh? Over the 1 year, 20%, but you see, had a pretty strong sell-off. It peaked back in November 2024. It's going to be interesting to see these charts when Daryl gets a hold of them. And this year it's up 26%, not bad. Now, I kind of like that they're up nicely, but not like screaming up like 260%, because my immediate response to like stocks that go up that fast is, man, am I showing up really late to the party? Is it just going to fade after this? But at this point, the market is opened. This stock is down 6%. The market cap of this company, a small market cap, great. Small caps have been performing so well for my portfolio for the last couple months. So I'm good with small caps. Revenue is 128 million. They are profitable. Look at this PE ratio, 11. That's really, really attractive. Analysts think it's a strong buy. All right, so let's take a closer look and see how their business has been moving. Now, I was taking a glance at their business, and keep in mind, they kind of had a switch over. Hey, previously they were a Bitcoin miner. They're moving to being a data center company with a focus around AI. And that switchover is not, it comes with a couple of, maybe a year where the financials look really weird. And so long as they successfully start their new identity, so to speak, I'll be good with it. So they had that year where they're like, oh man, we switched over, we stopped mining Bitcoin. So that revenue stream went away. And now they're beginning to really reap the reward of switching over. 41% growth in the most recent quarter after seeing their revenues really shrink when they stopped mining that Bitcoin. So that looks good. That looks good. The balance sheet's going to be really important for this business, but let's not jump ahead too much. They are profitable. They are not generating cash flow. Now that may be okay. And the reason I say that is if they're growing their business, they're buying GPUs, probably from NVIDIA, and buying all kinds of equipment to put in that data center because they've got a bunch of contracts with customers. And they're saying, hey, we're going to have all this revenue coming in. So we're having to spend a lot of capital on infrastructure. Totally understand that would be acceptable, but let's not jump ahead too much. I'm just trying to form a, hey, is that complete bad news or could it be okay? They have gross margins of 23%. I think that could improve. Back in the day, they were nice and high, but they've switched their business. Okay. And they do have some profitability. That means that's good. That's good. Okay. So the business is kind of in a trying to finish their change from one business to another. Now let's take a look at a couple of things. I'm going to look at the balance sheet first just to see what kind of debt we're dealing with here. All right. So the debt, we're dealing with $40 million of debt. The balance sheet looks really good, much better than CoreWeave. I've been critical of CoreWeave because of their balance sheet. So cash is 58 million. And then debt is 40 million. That's very good. They probably had a lot of cash on the balance sheet from their crypto days, from having built a lot of, or mined a lot of Bitcoin. And they were sitting on probably a really nice treasury. And they were like, hey, let's move over to the AI business. Cool. We got all this Bitcoin. Let's sell it, use that capital and reinvent the company. Beautiful. I like the idea. This was going to be my biggest worry, was this line. Because if I show you CoreWeave, and we'll look at CoreWeave later, and I'll point out the things I don't like with CoreWeave. All right, now let's look at a forecast here. We have 6 analysts covering this tiny little business, and they all think, man, this is a really attractive idea. 80%. All right. Now these guys are saying they already closed this year. Fiscal year 2025 finished March 31st. So we are already in fiscal year 2026. And man, look at this growth. 190%. Now, I'm waiting for that thunder. And if I don't hear thunder, that means the gods, the weather gods are okay with this company. And it looks like it looks okay. And next year at 41%. I mean, this is like really nice growth. Very good. Very good. Excellent. So I'm liking what I'm seeing. And their earnings per share is going to be 22 cents per share. It's going to grow 73% next year. So it looks good. So that looks terrific. Let me grab a few pieces of information. Actually, why don't I do this? If you're ready for it, Daryl, can you take a look at the charts on this stock? And then I'll start on the valuation.
Okay. So I drew a couple of trend lines just to get our eyes focused on this 5-year daily price chart. And first,
and let me interrupt you for just a second and just put out there, realize that they've had a change in go to market, right? They were a Bitcoin miner. Now they're going to be an AI business,
right?
And not at the front end, maybe toward the tail end of your review. If you can kind of reflect on that and say, how would you process that big, because that's a substantial change in the business. How would you process that? And then kind of look at the charts and say, okay, well, this is how I now interpret the charts, maybe at the tail end of your review.
Yeah. Okay. So what I see here is a series of lower highs as we've moved over the past 3 years. And I do see one line here where we connected 2 lows, keeping in mind that this was the tariff low. So this may not be necessarily fair. Maybe I could actually move that line up to, one of these other lows, excluding this one, to give us somewhat of a wedge that it's facing right now. But anyway, that's just kind of a long-term view. We do have a series of lower highs as we moved over the past 3 years. They are trading above their 20-day moving average, an upward sloping 20-day. They're trading above an upward sloping 50-day. And it looks like the 200-day may be leveling out and potentially starting to increase, but it looks like it may be on still of a down slope. That would mean an overall downtrend. They did get overbought over the since the 22nd of August. With this price run, they did move into overbought territory. It looks like today they're moving out of overbought with this 5.5% drop this morning. So the RSI is bullish. The PPO is bullish, but we're looking for probably a negative or bearish crossover in bullish territory here within the next day or so if this price action continues. It does have good momentum and relative strength compared to the S&P 500 on a daily view. It's been under distribution pretty much since November of last year on this chart, and it did reach down to a low point on the 1st of August, and then it looks like it's resumed, but starting to weaken here a little bit. Money flow has been positive, but that's also weakening at this particular point. So going back to your question, that's to me is more of a fundamental question until I start seeing the charts reflecting how sentiment is changing based on that different strategy that this company is moving into from a Bitcoin miner to an AI player. I'd have to see what traders are doing and their sentiment. That's what the chart would tell me. There's no way I can really, at least with my experience with charts, to be able to predict any price points given that change in their business. That would really have to be more of a fundamental exercise that we went through.
All right, perfect. So speaking of fundamentals, I literally just hit the last key and got a valuation on Hive. So I think the business is discounted by 49%. That's what I would think it's discounted by. And keep in mind, I am discounting the business by 12%. And for maybe newer people that are valuing companies, when you buy a business, when you buy, let's say, a business that everybody knows about, and it's a lower risk, right? Let's think about Microsoft. Hey, we all know Microsoft. They're going to be around for a long time. Not a lot of risk. I might discount them by 7.5% to 8%. But when you take a bigger risk, which is the case with Hive, I increased it to 12%. The way of saying it is the higher the risk I'm taking, the greater return on my investment that I want, 12% being the discount rate. Because then my cash forecast, it's being discounted by 12%. And this is the cash forecast. Based on that 12% discount rate, I think the cash flows in the future are worth 1.1 billion. The business is currently at a market cap of 823 million. So there's a 27% discount. And earnings per share is even better. I'm giving them a nice 36 PE, because if you're going to grow nearly at 200%, I mean, yeah, you deserve a 36 for sure. And I'm even going with a moderate kind of growth rate based on what I saw from their forecast. So this is a quite attractive idea. I like the small cap. I like that they're in the data center. And I've got CoreWeave right above them. And CoreWeave, I think, is actually priced too high. Part of it is that they carry some debt, and that debt is a pretty big number. So it kind of takes away from the value of the cash that I think they're going to produce in the future. I decrement it by 14.5 billion. That brings it down quite a bit. I think they're going to grow really well, but I think CoreWeave is, I think, using a lot of the positive stories around AI, and I don't blame them. I mean, they switched over from being a Bitcoin miner over to being an AI company. Good for them. But I think Hive actually looks far better in my eyes. Now, keep in mind, this is a terrific small cap idea. It's risky, high risk, but there could be some pretty good reward as well. When you talk about data center, you're talking about businesses like the big dogs in this industry are going to be Amazon with AWS, Microsoft with their Azure cloud, and Google Cloud. And you better believe that those businesses provide an equivalent infrastructure service as Hive or even CoreWeave. Now, Hive and CoreWeave probably can price their services more affordably because they're small. They're like, hey, you're not paying for the overhead that Amazon, Microsoft, or Google have, and we can get to market quicker with you. We can make you. It's usually the analogy is Hive would go to a small business and say, you're going to be a big fish in our pond. Whereas if you go to AWS, you're going to be you're going to be like plankton size creature inside of the vast ocean that is AWS. And to some businesses, it makes a lot of sense to partner with Hive. If you're a startup, you're like, hey, we're going to go with an organization that's smaller, that I know the CEO. The CEO and I talk once a month, and we talk about what I'm doing with my business and how they're going to help me be the best AI business there is out there. So I like the idea. Just be aware this is a high risk one. The value is there. The idea is a good one. The stock, I think, was selling off today. So it's wow. Look at that. I didn't hear thunder in Daryl's background, but the gods are communicating to us through the stock price here. But all kidding aside, today's a down day. And these small caps, right? When we have pullbacks and sell-offs, the small caps take the brunt of it first, because investors want to move from perceived high risk to lower risk. And smaller caps are riskier, especially smaller caps that are in the AI space like this. So this is a good one. I'm glad you brought it up. And I wouldn't have looked at Hive unless you had brought it up. So I appreciate that. Thank you for watching my channel. It's been really fun and satisfying to have a channel for a couple of years. I've met a lot of great investors, and together we've really grown. And I wanted to offer you the opportunity to become a member of the channel. It'll give you more access to valuations, research, more access to more videos, the tools that I use, as well as being more connected with me, as well as other members of this channel. There's 4 different levels. Take a look and see if one of the levels is something you'd be interested in. I think you'll benefit from being involved, and I hope to see you soon on one of the member calls or on Discord.